Hi, everyone. Welcome to Power Conversations at RBL Bank. I have a very interesting company and a very interesting individual, Amrit Acharya, who is a co-founder of Zetwerk. Uh, and to me, it's one of the most interesting and different companies I've at least encountered in the last 2-3 years. Somebody who's focused on manufacturing and the B2B space, who's actually getting involved in the tough part of building businesses, who does not have a consumer-like app, who is thinking about the pain points, the challenges of small businesses, both locally and then internationally. Welcome, Amrit, to Power Conversations at RBL Bank, and I hope your journey and your experiences can put a very different light and perspective to how technology and a different perspective and lens on looking at business problems can solve some seemingly intractable issues in India, even as we look at technology, digitization as being, liberating many aspects of the economy. So welcome, Amrit, and looking forward to a very engaging conversation. Amrit, as is our want, we always start with you giving us a little background on yourself and how did this idea of Zetwerks come into being, and then we'll take it from there as you share your journey with us.
Yeah, no, Rajeev, thanks a lot for having me here. It's a pleasure to talk to you and the rest of the RBL team. And certainly we've built our relationship over the last 2-3 years, and it's just become stronger, and look forward to having this conversation with you today. So yeah, I mean, maybe a little bit about me first. So me and Srinath, Rahul and Vishal, we started Zetwerk back in 2018. That way, we're still a fairly young company. We're 2.5 years old, but yeah, a lot has happened in these 2.5 years, and really, every quarter is different from the previous quarter. So fundamentally, me and Srinath, we went to undergrad together at IIT Madras. That's where we met, and post graduating, we happened to also join ITC. ITC has multiple businesses. We were in the agribusiness division of ITC. It was the classic Russian reversal. The division chooses you versus you choose the division, but it was a very happy outcome. That's where we met our first boss, Sanjeev Rangras, who's the chief executive of that division. He's an angel investor in our company today, but my first role there within ITC was to help build a new factory for them. I did that for 2 years. That's how I really understood firsthand the whole manufacturing industry per se. I was looking at it as a customer, and did that for 2 years. Then 2 more years, I was reporting to him as his chief of staff, helping drive his strategic agenda. Post which I spent some time in the US. I went to business school there at Berkeley in the West Coast, and worked with McKinsey in their Palo Alto office. And then in January 2018, decided I was going to move back to India. Srinath was the first person I called. He had spent 5 years at ITC, and post which he had started a company called Off Business, which is into SME lending today. His father also ran a small manufacturing unit. So it was a great convergence of me understanding demand and he understanding supply. And then we got Rahul and Vishal to join us, who had again extensive backgrounds in B2B. And of course, I'm trying to fit a linear narrative on a non-linear story, but that's how it roughly came together. We started off by wanting to build software for manufacturing companies to help manage their supply chains better. And we started with this idea in May 2018. Within 3 months, we realized that I think this is a very interesting problem to solve. But at least in India, we felt that the market for software was not deep enough, and the sales cycles were fairly long. But yet every customer we met was asking us, "Can I use your software to discover new suppliers?" And we understood that to be a more latent but very important pain point. And it was a very it was a pattern which is hard to ignore. And hence we made a pivot. To our credit, we made our pivot very quickly. We had raised a seed round before the money had come into our bank account. We made our pivot, and luckily we had great investors who supported us. But by July, we had launched a marketplace. So we started onboarding small manufacturers in India, and helping them matchmaking with large industries. And today, what that has led to, Zetwerk becoming is, fundamentally we've become a marketplace for contract manufacturing. We work with large to medium-sized companies to convert their digital designs into physical products. We don't do this through our own manufacturing facility. We have a network of small manufacturers spread throughout the country. What we solve for is fundamentally matchmaking, which supplier can make what, because not everyone can make everything. Then, what is the right price point? Because these are made to order, unlike a D2C or a e-commerce company, there's no catalog. Pricing is a very point in time answer. The price to make a certain product today is different from 2 months later or 3 months later. And most importantly, we solved for transparency. Once you place an order today, at least in the status quo, it's a complete black box. You have no idea what's going on to your order from order placement till delivery. And what we have built is a software platform where, as a buyer, you can just log in and say, okay, today this product and this specific SKU is in this stage of manufacturing. Maybe the raw material has been bought and the supplier has started production, or in certain cases it has yet to start, or in certain cases it has already dispatched and it's in transit. It's completely transparent, and as a buyer, it reduces a lot of anxiety for them, because unlike a e-commerce transaction where the cycle times are in order of days, our cycle times are in weeks and months. And buyers really like to get to know where their product is at any point in time.
So, Amrit, this is very interesting. And I mean, I think when you did your pivot to becoming a marketplace, what are the other capabilities you needed to build? Because you were dealing with a very, I won't say disparate, but manufacturers who are of different sizes, different capabilities, and many of them probably were not used to dealing with a marketplace. And then suddenly you opened up to larger companies which would want to buy their manufacturers. What are the capabilities you had to build to catalog these SMEs, these small time, fabricators, so that you could get confident confidence in terms of how you would represent them on a marketplace? Ultimately, the proof of the pudding is if they deliver to your buyer satisfaction.
Yeah, no, that's a very important question, and that's actually the heart of our business. This small manufacturer in India is really a subscale business. End of the day, is what we have realized, and for multiple reasons. Like, one is, if you look at the specific niche we target, we've chosen to focus on industrials largely, and within industrials there are certain categories like fabrication and machining. Most of these, the profile of these entrepreneurs, they're all engineers. These people would have worked at GE or Tata or L&T for decades, and then come out and set up a shop, and GE and L&T and Tata is their only customer. Heavy on customer concentration, very cyclical businesses. Some months of the year, the promoter is prospecting for clients. The remaining months of the year, trying to execute on those orders, and then the same person has to do sales, marketing, production, buy raw material, arrange for trucks. It's a very difficult business. And and uh, and if you look at the DNA of these guys, they're all engineers. They really like to make. Everything else is very non-core for them and not as fun for them. And what we realized was, that this is a large problem for every small manufacturer in the country. And the step one was to figure out who these people are, because they're not on the internet today. And if you type their name on Google or IndiaMart, best case you will get like a website with some information on their name, address, etc. Because all of these tools that have been built over the last years or so, they've indexed towards cataloging these suppliers from what products they can build. But these suppliers, they can't list products, they can only list capabilities. They can say, oh, I have a lathe machine of certain size, or I have a certain fabrication capacity of so many tons a month. And it's very different from how companies like IndiaMart fundamentally look at these types of businesses. So what we set about doing is, first of all, creating a digital profile of these businesses, starting from every machine they have, who are the customers they have built, what kind of quality certifications they have, what kind of infrastructure they have, and what is the nature of the entrepreneur themselves. Sometimes it is the main business, sometimes it's the side business. We collect
Sure.
200 to 250 data points per small manufacturer, and we do it the hard way. We go to these suppliers, we visit them, we do we have an app now through which we do the onboarding process. It's not a digital onboarding where it's like they just send their name and information and we add them to a database. We collect a lot of data. Ultimately, that's what goes into matchmaking, because a very simple example, you'll get a customer which has a design of a circular product. It needs something called a bending machine, because the raw material comes in straight lines. You have to bend it to a circle. Maybe 1 out of 5 fabricators in India will have that, because not everyone is used to working in circular shapes. And today that information is not there. It's there in people's minds, or at best, you have to find local consultants, it's still very tribal. And
Hmm.
what we have tried to build is fundamentally a platform where some of this tacit knowledge that is there in people's minds can become more structured and explicit.
Very interesting, and I'm just intrigued. The way you're describing it, you're almost saying that this is the bane of a lot of small businesses who are great on aspiration and ambition, maybe on capability qualification, but are not able to bring all the production inputs, the management inputs together because of size, because of not having enough people. Uh, and your contribution to them is to actually say that, look, these are the things I would need over time. And this is the way I can help you access a broader market and also force you to step up to the plate and improve some of your internal things. Is that a fair way of summarizing what you're attempting to do?
Yeah, if you look at all of these suppliers, they small manufacturers, they have on average 50 to 60% utilization, but it's not a straight line. It's a very volatile line. So our promise to them is, look, we will make your demand curve flat. We will also try and improve your utilization on average over time. And you focus on your core, which is making. We will handle everything else. We will be your raw material partner. We will be your logistics partner. If you need access to credit, we will partner with the banks or financial institutions to give you that support, so that your bandwidth is really spent on things you enjoy the most, and which is just the art of converting raw material into
Hmm.
finished product. And that's a promise which was it was very new for these guys, because they've traditionally small building a small business in India is very tough. That's also something we have learned. We've had a
Yeah.
lot of empathy for the amount of effort that it takes to build a small business in India, especially on things like working capital, because large companies historically have used these small manufacturers as a bank in a way, with long credit cycles, and being very kind of top down in how to deal with it. Whereas
Yeah.
what our approach is fundamentally, we're your partner. If we succeed, only if you succeed. It's not it's not
Correct.
like we are trying to win at your cost.
Well, some stories or anecdotes, Amrit, where today you feel a lot more confident the way I can sense it, your top line and turnover and the expanse demonstrates that. And at some stage, did you, I don't know if I got it correctly, did you start owning the demand as well on your balance sheet, or it's just as an intermediary, are you monitoring it?
So we do own the demand. We spent some time talking about the supplier, but let's talk about the customer also. Like if you
Yeah.
look at these customers, their fundamental pain point has been, end of the day, uh, they're a little risk averse when it comes to bringing on new suppliers into their ecosystem because they've been burnt badly as well. This industry needs a middle layer. If you look at most internet businesses in India, they say we want to eliminate the middle layer. We want to remove a
Mm.
broker. We have a very different point of view. We're creating a middle layer between two parties which did not have one before. And we of course are still able to make the unit economics work because there is enough margin on the table. Fundamentally, the incentives of the demand and supply side have been completely misaligned. The demand, if you talk to these large companies, GE, L&T, the biggest problem is they've worked with the new supplier, but the supplier has always overpromised and underdelivered. And why does the supplier overpromise, underdeliver? Because it's a one-man show. He needs to win the largest possible sale so that he can spend manufacturing it. And once the buyer and supplier have decided to work together, it's sort of an unhappy marriage till the transaction ends. And it's a vicious cycle. The supplier will always say, I got burnt by this customer in Bombay, and hence I am very risk averse. The customer will say, I got burnt by this supplier in, Rourkela, and hence I'm going to be risk averse. Somebody needs to bridge that trust deficit, and that we feel that we are uniquely positioned to do that. And hence, for the buyer, transparency and traceability is very, very important. So we decided to solve that from day zero. Like, look, if you place an order on Zetwerk, you don't have to follow up with us saying when am I going to receive my material. Here's a portal. Just click it, and everything is live. You can choose to
Mm-hmm.
interact with the supplier directly. You don't need us to broker that as well. All of that happens online. All of the payment flow happens through that uh, process. So even the supplier can see, okay, this customer has yet to pay,
Sure.
or all of that. So really, what we are trying to solve for is trust, and all of the tools are just enablers of that process, making this thing more transparent. We feel is good for the industry and good for the country long term, and that's our thesis. All the work we do is just try and make it more and more transparent.
And Amrit, as you've seen over the last 2 years, as you implemented this new thing, were there moments when you felt, this pivot, is it right? Or is it very laborious in terms of getting it on? Because, hey, I was building a software, I can also do cataloging. Were there moments like that when you just were ready to throw in and say, let's go back to what we had intended to do?
I mean, for sure, you need a little bit of irrational optimism to start a business, especially in India. I think we definitely are biting more than we thought we would when we started. But luckily, like, we have a great team. Like, between the four of us and the larger team that we have been able to build, there's a lot of complementarity. And secondly, the they felt the additional work that we do, they felt very natural. They've not felt okay, company X is doing it. And we have a lot of role models in India, like there are a lot of marketplace companies in India which are all a very different operating model. We've never felt okay, let's say Zomato does this and hence we should do this, or urban company does this and hence we should do this. Our suppliers have told us this is what we need. Our customers have told us this is what we need, and to our credit, we have listened well. I would say uh, uh, that's something which I will take credit for as a company. That we have been very first principles, and hence the additional work that we have done. If you look at it in a 1 year time period, it seems like a lot. But if you look at it in
Mm-hmm.
a day to day, it feels okay. Yeah, it just makes sense. Let's just do it. Let's just add this additional layer. And we have a very technology DNA. So when we solve one problem, largely it's solved forever.
You mentioned something right now which actually is very interesting, and I do agree with you that every problem, or well, I would say many problems can be looked at from first principles. And actually, you can use technology to solve some of them. It doesn't mean you don't need people. It doesn't mean you don't need to travel. It doesn't mean logistics is done and dusted. But yes, if you look at it from a first principles perspective, a lot of that is actually information asymmetry or gaps in understanding, which can be bridged with the intelligent use of technology. And I think somewhere, Amrit, my sense is that somebody who's not steeped in manufacturing can actually take a better call of it than somebody who's been steeped in manufacturing, because they'll probably go back to the first principles. Is that a good way of including it?
Yeah, I think you're right. Like, all of us have our own biases, and we bring that bias based on experience and let's say knowledge which we have accumulated over the years, and say, okay, ye ho payega, ye nahi ho payega, or something like that, some version of that. I think the benefit we have is, we are ignorant that way. We don't know what can go wrong till we experience it, and hence every problem is a problem that is solvable, and we're not afraid of, and some of that is, venture capital helps, goes a big way. It allows you to make mistakes, and as long as you don't make the same mistakes again and again. Our company has a blend of two different cultures. Like, on the one side we have software engineers who are your new age people like me, per se, and then there are folks who are from the industry who spent many years building knowledge of how to make items, and we try and blend the two, and it's constant work in progress. Like, there are folks who are from the industry who've come and told us that they really enjoy this environment because there is certain speed and agility, um, and the way we look at things is very fresh. And there are people on the other side who are like, wow, I didn't even know that these are problems that needed to be solved, and how tech and play that role. So, as founders, we understood the industry from outside. We were not industry insiders when we started. Today, we feel we're fairly confident that tomorrow, if I have to meet, per se, let's say the L&T chairman, I can hold a conversation. And but we got there.
I noticed that your business volumes now are actually far higher than pre-COVID on a monthly basis. So is this a reflection of a revival of manufacturing, uh, over the last few months, or you see something specific which has helped you do that?
Yeah, it's a mix of three trends that have happened, Rajiv, over the last 6 months or so. I would say, if you had this conversation in March and April, you'd see a very different face. You can read the doom and
You can double that, Amrit. You're all in the same boat.
yeah, no, we literally had our business go down. It went down 90% in a single month between March and April. And at that point of time, we didn't know how long this would last, and we were all in the same mindset. We need to conserve cash and just extend the runway for as long as possible. But I would say we have been extremely pleasantly surprised by the speed at which recovery has happened. You're right. We are actually close to double of our pre-COVID volumes. We will double in size most likely by December or Jan, between what we had just prior to COVID. And it has happened through three broad trends. One is, yes, core manufacturing has recovered. It is still recovering. It is still, I would say, a little bit slow. It is not 100% recovered. I mean, I just meant the pace. The volumes have recovered 100%, but the pace is, we used to grow 10-15% month on month in those categories, but we are still waiting to see those kind of growths in the core industrial segment that we used to operate in. And largely that's a function of capex being shifted by few quarters. If you look at all the industries we serve, they're all traditional industries like oil and gas, thermal power, renewable energy, steel plants, cement plants. All of these companies deferred their capex by a few quarters, they're slowly starting to go back to their pre-COVID plans. And hence we are pretty confident that in a quarter or two we will see those recoveries happen as fast as we saw. But the other two trends have been very new and surprising for us. One was, of course, the whole Make in India movement,
Mhm.
and we benefited a great deal from that, where a lot of consumer brands and companies reached out to us saying, "Hey, overnight our supply chains have got disrupted, and there is a shift in consumer demand. We need to localize some of our manufacturing in India. Can you help us?" And this was we got this very there's no pattern beyond that. They were all consumer companies. We
Mhm.
got inbounds from television brands. We got inbound from refrigerator companies, 100-year-old companies, and new age T2C brands. It was all over the world. Toy companies. And if you
Mhm.
go to our website, nothing in our website says we can make a television for you or we can make toys. Our website is very industrial. It says fabrication, machining, etc. So
That's
I
right.
would anticipate we are capturing maybe 1% of the demand that is there in the market. And but we made that we are helping a lot of these brands today to shift production to India, and we don't see it as a short-term trend. We see it as a fairly long-term trend, especially in categories like consumer electronics, where we're now seeing the government also step up in terms of new incentives to incentivize people to move manufacturing to India. And we are slightly downstream in the chain, but obviously any macro shift does impact us. So that's one thing we saw. The second thing we saw was our international business picked up in a major way. Like we've been trying to acquire customers in US, Europe, these high cost countries. I would say we've been trying to do it for a year now, and we are making very linear progress. Like every month we would get one customer maybe, and we would celebrate it as a big win. During the summer, we got 15 customers in like 2 months, which was just like unprecedented for us. And this is again first time buyers to India. They were previously buying from East Asia or other countries, and we are introducing India as an alternate supply hub for a lot of these companies
Sure.
for the first time. And the supply base is still the same. We're still working with the same set of suppliers. And today, international has become 10% of our overall business. From less than 0%, let's say the same time last year. Um, so these are two big trends. We were at the right place at the right time, but of course, a lot of hard work goes into being at the right place at the right time.
Sure.
A lot of the
Yeah.
capabilities that we built were able to service these new types of demand, and which have actually helped us grow in a big way.
Tell me, Amrit, these people discovered you on the net, or you had been in conversations? You
All
have
in.
an active uh, calling out plan.
It is 100% inbound. Even today, every week we get anywhere between 5 to 10 new inbounds from very very different diverge type of customers, and some of these companies are well-known brands, like, and you would be surprised at how non-local their manufacturing cycles are. Most of these companies have been used to uh, you know uh, getting everything imported and just maybe do a little bit of assembly work here in India, and maybe attach their label on their brand, and that had been enough for all this time. But we definitely see that changing. We've experienced it firsthand, and we also took our time. For the first 3 months, we ignored all of this. We thought, maybe this is all noise. It's like
Mm.
TikTok getting banned. Maybe at some point it may get unbanned. We didn't want to build our business on a short term trend, but we have built enough conviction this is here to stay, and at least for the next few decades or so, these industries are going to grow at double digit CAGRs for year on year. So, and hence it's become a important business area for us.
Your CAC and your LTV must be the, the things which a consumer company would aspire to. I mean, I guess you probably don't spend a lot of money in marketing and reach out. and then you get these customers who will probably do business with you for quite some time.
Yeah, you're right. Like we unlike a lot of companies, we don't track LTV CAC ratios because our LTV CAC ratios are outlier LTV CAC ratios. We
Yeah.
don't spend any money on marketing, but we do spend money on sales. So we have a largely sales-driven effort. We are hoping to change that over the next 6 months or so, where we hope that maybe 20% of our business can come from inbound/marketing-led channels.
Is it fair to say, Amrit, you raised about $60 odd million over the last 2+ years?
Yeah,
And almost whatever you spent has gone into people, technology, processes, uh, and now are you? Where would you rank? Where would you position yourself from a free cash flow perspective, uh, assuming that you don't have to put a lot more money in scaling up? Is that something you're happy to just talk about?
yeah, we're happy to talk about it. Like we look at venture capital slightly differently from other companies. Like we've tried to be unit economics good, have good unit economics from day one, and I think that's good discipline because our view is unit economics is not a button. Like today you want to suddenly charge 10% or whatever is that number, and overnight it happens. It is a gradual journey. You demonstrate the value proposition to buyers and suppliers, which allows you to monetize the way you want. And hence, we made very less 2 years ago. We have tripled our margins in that time period. But we have done it in a way where buyers and suppliers are still very happy to work with us. It's not led to any NPS reduction. So we have been cash efficient. We actually in the last 6 months or so we've actually been cash flow positive, and we're about to turn EBITDA positive, possibly in a few months from now. And today that cash flow positive funds our salaries fundamentally, and over a period of time we hope that we can use it to do more. The way we have looked at venture capital is it's an avenue for us to make mistakes. It's a shock absorber for the company rather than it really is capital that you need to grow the company beyond. That being said, manufacturing is a huge industry in India, and trillion-dollar industries globally, and we are now having footprints in other countries as well. And we feel there is a lot of opportunity to deploy capital in this industry with very attractive returns, and we want to be that vehicle through which we allow other people to do that, whether it is through M&A, whether it is through enabling new manufacturing entrepreneurs to set up shop in India. We want to participate in that uh, journey, and India is going to go through a 2 to 3 decade boom in manufacturing, and we don't want to be a passive observer. We want to be an active shaper of that process. So we have now started partnering with various small companies to be their quasi to be their partner, so to speak. Like every new order we will try and win it together,
Got it.
and some of that requires capital.
Given the last 2-3 years of work you've done, if you have to sit down with the government of India and say, look, these are the 3 things you need to do to strengthen MSMEs, strengthen manufacturing, what would those be? Besides, obviously, network becoming more and more important for their lives.
No, it's an interesting problem. It's an interesting question. Like I think one thing we have seen is directionally there's a lot of intent to at least boost manufacturing in India. I would say the biggest challenge suppliers face, and I'm sure you must be aware, looking at this from your vantage point, is credit. End of the day, these are all family-run businesses, proprietors. They pledge their assets, and against that asset, they get a working capital line. and hence beyond the value of the asset, they struggle to grow. And you see other countries which offer unsecured lending via the government at very low interest rates. Like you'll see 1 to 2% interest rates. So of course the interest rate is a function of the trust that is there in the economy, and India is still a low trust country. End of the day, it will take time to bridge that, but any move that can go in that direction is a
Mhm.
positive. Just in increasing the availability of credit that is there for this industry. And if we believe that in the next 20 to 30 years we want this to be a big contributor to the economy, I think it's very important. The second thing is digitization. The small suppliers today, we are still maybe less than 0.4%, 0.5% of the market in terms of coverage that we have been able to touch in the last 2 years. And there is a long way to go. And some of that digitization we are seeing in payments in consumer sectors. There's a lot of problems in payments in B2B as well. There's fundamental, even today if I have to create an escrow account, it takes, unless I have a relationship, it takes 10 days to create that. And still it's not as widespread. Whereas you see in other countries which have again countries like China, this was the real innovation that a lot of companies are able to bring in, that if there is a trust deficit between a buyer and supplier, we will create a digital escrow through which payments happen.
Sure.
And just that as a proxy, the level of digitization in a country is still fairly low. And lastly, I would urge large companies to also play their part. They should think of this as not a, it's not a zero sum game. We all hope to increase the contribution of manufacturing to the India's GDP overall, from where it is today to maybe double or triple. And that can only happen if we have a collaborative attitude, and some of that can be driven by regulation. So those are the three broad areas where those would be my.
To your point on digitization, like many things, the easier part has been done for consumers, especially for people like us. The tougher part of small businesses is still open right now, and I think that's frankly a large opportunity. And hopefully, I know your investors are all eagerly investing in those areas. So let me just talk to you about your kind of you have some phenomenal names on your cap table, uh, and how did that process happen? What are they? You mentioned about venture capital. How do you position it? What's been their contribution in your 2.5 years? Uh, board dynamics, and how do you handle that? You have some 3 or 4 marquee names. I'm sure all of them are equally. If you talk to them, each of them, they will all say great things about you. But managing them is also, equally important.
Yeah, no, we have a great board. I think we've been blessed with a great board, and I'm increasingly discovering newer and newer facets of the individuals on our board, and how they've had some linkage to manufacturing in their personal lives,
Mhm.
which obviously helps. Like some of them had family businesses in manufacturing. So we have um, 5 investors today, external investors, beyond a few angel investors. We have K Capital, Sasha Merchandani. Obviously, they have
Yeah.
a large um, background in consumer manufacturing from Onida. Then we have Axel, we have Sequoia, we have Lightspeed, and we have Green Oaks. Green Oaks is a US-based fund, and the rest are
Yeah.
all in India-based funds. So the obviously we had these additions over a period of time. Like we had one fund, and then we had two, and then over a period of time we now have five of these funds. And we're all very aligned that this is not a company we're trying to build for the short term. Zetwerk is going to be an asset that is going to be very important for the economy of the country over the next decades to come. And some of our investors have that lens. They're not in it for the next year or two, or they don't want an exit in the next few years. Some of them are happy to stay invested in the company for as long as it takes. And we feel that we are building an asset that will compound for the next 20 years or so.
I also think your investors want to see the next B2B opportunity through your lenses. I mean, I think this is a good way to capture the challenges and the gaps in the Indian business ecosystem. Because many of these guys have done enough on consumer, and I know they are actively looking at the B2B space. So I guess they see the problems through you, which they are now looking to address otherwise. Fantastic. I want to just change tax, Amrit, and talk about, your own, you shared your journey. You know, if you kind of think about your four of you as co-founders, and you've known each other to some degree, how does that chemistry work? How do you define your areas of specialization? How does that all fit in, especially when you're in a very frenetic environment where too many things are happening? Maybe just share with us some of those nuances.
Yeah, I feel like we follow a very decentralized leadership model, where we try and we follow this all the way till hiring. We try and build conviction upfront, and once we have conviction, we kind of let people run their show. And this is something which we have learned through our boss, like our first boss at ITC, Sanjeev Rangras. He's master at this. Like the amount of work that he gave me as a 20-year-old fresh out of college, like I would be very hesitant to do that today at the company I run. He empowered us to take big decisions, and it didn't matter. Obviously, there's oversight and other things, but fundamentally, it came from a place of trust and conviction. We try and replicate that in the company. We have a very high ownership culture, and we have a very transparent culture. Like all the things that I'm talking to you today, they're known to the company uh, in a much higher level of detail. We have so many emails flowing around with data, and there's so many people marked on those emails. It's not that difficult to for anyone in the company to know what is the overall financial health of the company, what is the growth of the company, and what all are areas that we are all focusing on. So obviously that has to come from the top, and luckily, we've had that culture in our prior companies where we've had a lot of degree of ownership and conviction from our bosses, and we try and replicate that here. Between the four of us, today, I would say we are all generalists. We are, like, for example, we're trying to build a new consumer opportunity. One of us is championing that. We're trying to build a new international opportunity. One of us is championing that. And we're very lucky that we have another 20 people in the company who are, can be called founders in a way. And they are, they're holding the ship steady. That once we have a little bit, semblance of what we call product market fit, they're able to take that forward and build a large category over and above that. So, but fundamentally it comes from giving people that trust and confidence. And we're also very lean that way. Like we are a Series C company. We are around 250 people. If you talk to people in US, it'll seem like a big number. If you talk to people in China, it'll say, wow, you're only 250 people. And even in India, like if you look at companies of our vintage, easily companies have had 5x the headcount, and we can choose to do that. We can have 4x to 5x people, and we can create jobs do get created organically. But we have chosen to stay lean. That means some of us are a little bit under stress constantly, but we feel that it is the right call for the company. It builds that chemistry over a period of time. Like the business compounds over years and months, relationships compound over years and months, and the tighter they are, we feel that the more value we can get out of them.
Fantastic. Some of the insights you've shared and some of the words you've used, Amrit, just tells me that I don't want to guess your age, but I do hope and I do pray that we all see many people like you at your experience come and take charge of getting India to its rightful place. And I think a fresh thinking with the right principles and the open approach is what we need, because I know business in India, has been done on very different lines, and I think you used a very important word of low trust, and I think we do pay a high price for a low trust, society, low trust economy, and I think that has to change if India has to truly become self-reliant and a very big economy. So I really admire some of the things you've shared. Like I said, I was looking forward to this conversation because I hoped I'd learn a lot, and I can tell you I've learned a lot. And you guys are doing something very, very interesting and inspiring. And I really, really wish you and Zetwerk all the very best, because to me, your success should inspire thousands others to take up the tough challenge of modernizing India, both physically and in the mind. Uh, Amrit, thank you so much. I probably have 10 more questions, but I know that if I keep pegging at them, we would lose the essence of what you've just shared with us. So I really appreciate you're being candid, you're being open, and more power to you. And I hope we continue doing business together and learning from what you all have done, and hopefully keep contributing in some manner to the development of India. Really appreciate that, Amrit. Thank you so much.
Thanks a lot for having me.